Good morning, guys. So in this video, we'll talk about the entry points, like how the Ict SMC trader has a setup. But basically, I basically used just two, which are the fair value gaps, which I hardly use. I'll give my reasons much later. Then the order block. But before then, let's do a quick recap on the structure and how to name them that we did yesterday on the previous video. So we have, let's say, the bearish markets, impulsive sell, correction, impulse, correction, impulse. I told us how do you validate it? You need two breakup structures. The two breakup structures must be complete. You have just one. It's not a breakup structure. If the candle didn't close below the previous low, it's not a breakup structure. And once you've seen your impulsive sale, that caused your first breakup structure. You saw your correction and the second impulsive sale that caused the second breakup structure. The leg that caused that second breakup structure now, it's always your inducement again. How's your inducement? How's your idea? Then for the bullish market, the same thing, impulsive push, little correction. Impulse. Once you see your second impulse, that's your first breakup structure. That's the first breakup structure. Then when market corrects again, and give you the impulsive push again, then that's your second breakup structure. Then it's on the, what's it called? It's on the leg of the second breakup structure, the origin of that second leg that caused that second breakup structure. That is always your inducement. I use X as a inducement. So you see me put X on my charts. See me put IDM, I mean inducement. So that's that about structure. Then how do the SMC trader engage? They trade from the origin of that first push. The origin of that first push, that's where they trade. Is origin of that first push, of which from that first, the introductory part, I talked about the candles that I trade, which I felt that was a little better, but let's just go this way because some persons prefer names and all that. So how do they trade? If you trade the origin of that first push, you see things like order block and the fair value gap. I'll stick myself to just these two. Order block will be this close. Order, sorry. G. Gaps. So from definition, yeah, your order block will be for the selling market for a bearish order block. Okay, let's say bearish. Bearish will be for sales now. Would be your last buy candle for an impulsive sale. Impulsive sale. That's cost. So that's cost. Structure. That's that for the bearish will be the bearish order block. That's the last buy candle before an impulsive sell that caused a breakup structure. So once you've seen this stuff, so the last candle here, the last 2, 3 candles are formed here. Because your bearish OB. So the last 2, 3 candles are formed here that are impulsive. Candles are impulsive. Candles are impulsive. They cause the break of structure. So the last buy candle, by the buy I mean, okay, the last green candle that is probably small before the big red candle. So the last buy candle now is a green candle. Then before the impulsive, so the impulsive sign is a big red candle. That like this leg now, a break of structure should come from this leg. Break of structure should come from this leg. So that's that. So once you check the origin that caused that first break of structure, yeah, make sure you see the last small green candle before a red impulsive candle that caused the break of structure. So you anticipate price return to that block, then you short. Then for your bullish OB, for your bullish order block, for your order block rather, is the last sell to buy candle. Last sell candle before sell candle before the impulsive buy. EY costs a construction. So that's it. So your OB is, let's say, a set of candles, not a particular candle. It's a set of candles that did either of these things. One, it caused a break of structure. Two, should cause an impulsive push. An impulsive push should come after that candle from to validate the zone. Then you anticipate price coming back into that zone to continue in that direction. So let's go to the charts. Let's see that check this with. Okay, let's a big card. Then set the trigger display. Trigger this. Yes. Trigger display community. So if you check here now, check this my entry points. Let's show these points. Let's show these points. But before then, what can you see? The structure mapping. I have this impulsive push correction. Then this impulse. So what can you see? What can you notice from these 2 points? What can you notice? You notice I have my first this push will be my first paper structure. US1. The market retraced, corrected, and gave me a second breakup structure somewhere here. Then this whole region that caused the second breakup structure was my ideal structure that I just told us before now. For the bullish market, you need to see the impulsive push, correction, impulse again, correction, impulse. So this was my first breakup structure there. First BLS there. Past this one there. First breakup structure there. Then it gave me the second breakup structure there. Then the origin of that second breakup structure was my inducement, which is this one. And I told us to anticipate price coming back to the origin of that first push. Okay. So from what I just taught us now, this origin of the first push now, we look for candle that is impulsive that caused this first breakup structure. And if you exchange it properly, now you can see this push was a little to the higher side, depending it close above that. So this candle, you can see the last red before this thing. That was the last sell to buy candle. Last sell to buy candle. That was the market in the future. You see the tap. After just tapped inside and you will check again how I'm anticipating how your first impulse will push your breakout structure. Correction, inducement, second breakout structure. So I'm anticipating price coming back here, will continue it. The price already coming, price breaks another high here, then this zone will be the point of entry. So that's that for the other block. Then let's check it. I think I traded them. What's it called? It's a very quick trade. It's a very quick trade. Left here. It's very quick. Just 200 pips on the left. Out there, I get the sensor. Okay. I was on the 4-hour shots. Good. The 4-hour shot. Okay, I'll teach you strategy much later. Yeah. I saw this reversal pattern, 3 candle formation. I saw this 3 candle formation, the tick candle, the doji. And the doji formed in respect to this previous zone here. So once I saw that happening, I think I switched to the H1. I looked for this impulsive push, small correction, and impulsive go lower, you see it properly. You can see now an impulsive push here, correction, and an impulse. And I marked the last candle somewhere here, and that was my entry. I see price just tapped it here. Price just tapped it here, and gave 100 pips. I left at around 100 pips or so before this retracement. So that was the second trade. Then let me check. This last week was really horrible. Like, let's check. Let's check. On the other block, okay. This one failed, but the same thing you can see here: impulsive push, first breakup structure, corrected, gave you your inducement here, IDM here. Then your IDM now gave birth to the second breakup structure of the USD. So once that is done, you look at the origin of that first push for the last candle that's moved. And if you look at that place properly, you see a small green candle and a bigger candle. This one that caused the first breakout structure. But it wasn't that impulsive. More reason it didn't hold price. Yeah, if it was very impulsive, price would have held. But you can see it failed to. It's telling you this zone didn't hold much price. If you check here now, so the same thing has happened. So most likely this zone now will be a flip zone for next week's trade. What do I mean? Impulsive push, breaking above this high, the correction, and impulse again. So your first breakup structure now will be somewhere here. Your inducement, second breakup structure. So what do I mean? I anticipate price coming back into this zone now to continue next week's move. So start from here next week, probably next week now. We engage somewhere here, go long. See the same thing like over and over again. You don't need to really do much. Okay. This one, the same things we gave the flip market bias. What do I mean? This was a very nice impulsive push. An impulsive push gave us our first breakup structure here. First breakup structure happened here. Markets corrected. So this was your inducement. IDM should be this, like the last correction, second break of structure here, first break of structure here. Then this, if you check here now, see this candle was impulsive. This candle was impulsive here, yeah. Gave you your first break of structure. So that whole region now is always your order block. Last green candle before the impulsive sell. You still feel that. So but once a valid zone fails, it turns to a flip zone. So market will come back into that block and continue. And you can see here now markets already have a block as at last yesterday's before closing and gave almost 10 pips if not more. Let's see. 50 pips move already. 50 pips move already. That entry. So that's it. That's it. Let me check if I can see another example. Okay, this pair. I lost money here. But let me walk us through it. The same. If you can see this one now, yeah. See this sell was impulsive. Your first break of structure, impulsive sell, your first break of structure, retraced, gave you your inducement, gave you your second break of structure. Then you mark the last green candle before the red candle. That's it. And you can see market came back into it and dropped. How many pips dropped? That's it. 230, almost 240 pips drop from that extreme entry. I failed because I think I went on the lower time frame here to look for a sell setup. Was it? You can see the structure too. You can see the structure. It was impulsive as well. Look, it was I have it very tight SL that so that was it. Impulsive sell. The first break of structure here. Corrected. Gave me inducements. Second break of structure. So that was my point of entry. But I had a very tight SL. That was the reason. If I had used my normal SL value, I think I would not have lost that trade. But my SL was a little small, so it just swept me and continue. I normally take 1 to 5 and leave the market. You can see even came up to 1. If you risk 1 to get 7. But my SL was a little small, so it swept me. But you can see the structure mapping and the point of entry, yeah? So this is what you guys call your A setup. That's it. You need to see your 2 break of structure to validate the trends. That's your first break of structure, second break of structure here, an inducement on the IDM here, your first break of structure, your second break of structure. Once you've seen these two, make sure this leg is impulsive. Then the 2 candles, the last buy candle before the sell, mark it as your point of entry and boom, that's it. So I lost here because my SL was a little tight. That was just it. You can see the extreme delivered and respected price properly. So that's it. Okay, guys. So the next video I'll talk about the fair value gap and how to engage using it. So stay put.